Hello folks, welcome to Legacy IAS. In today's video, we will be discussing about a current affair topic where RBI's Monetary Policy Committee has decided to keep the policy rate unchanged for 11th time in a row. This is brought to you by your faculty Sushma KP. Let's get started with the video. So as we discussed, RBI's Monetary Policy Committee has decided to keep the policy rate unchanged for 11th time in a row. Now, in this topic, we will be discussing as to why is it in news, what was the outcome of the RBI MPC meeting of 2024, and what was the stance of Monetary Policy Committee. Then we will see what is a Monetary Policy Committee, what is a repo rate, what is inflation targeting, and what is its impact on the economy. At the end, we will discuss a mains question. Alright, let's get into the video. Now, where is it relevant for you in your UPSC? GS paper 3, economy, specific to significance of interest rate on fiscal policy and monetary policy. Alright. Okay. Why was it in news? Like again we mentioned, RBI monetary policy meeting took place, according to which, they have maintained, the stance of repo rate to be unchanged at 6.5%. This has been continuing from a very long time. Now, let's take this question. What is repo rate? Now, as of now, repo rate, simpler understanding, we'll discuss in detail further. For now, to understand it like, this is one of the tools used by your central bank or RBI, to control the flow of money in the society, as well as to balance out inflation. Understanding? Simpler words, what is it? Control the stimulus of money in the economy as well as to address inflation. In detail from basic question, everything we'll discuss later. Right now we'll just see what was the meeting, what was the... So repo rate remained unchanged at 6.5%. Your GDP prediction for the year 2025, this is the forecasted GDP, that is, for the next financial year, was slashed to 6.6% from the previous predicted rate, from the previous predicted rate of 7.2%. So from 7.2%, they have reduced it to 6.6%. Next, your cash reserve ratio. Your cash reserve ratio was again slashed, meaning reduced to 4% from 4.5%. Here, what is cash reserve ratio? CRR means cash reserve ratio. Cash reserve ratio means this is the amount, the amount that your commercial banks have to maintain with the central banks. Simpler words, this is the amount that your commercial banks will have to maintain with your central bank, or in this case RBI. So that in times of need, if any emergency happens, there will be some kind of backup. For example, during your COVID pandemic, your Reserve Bank of India reduced the cash reserve ratio. Why? So that if the banks, let's say a simple example, your bank has 100 rupees, your commercial bank has 100 rupees. In that, if your RBI tells no 30 rupees, you have to keep it with me. Remaining 70 rupees is up to you what you will do. But whereas in pandemic time, it was very difficult scenario, cash crunch, everything was happening. So to make sure the Okay, economy is brought back on track. What happened? Your RBI said, okay, 100 rupees you have, no, already pandemic is happening. In that I usually tell give 30 rupees to me, no, this time you do one thing, you just give me 10 rupees, you keep 90 rupees. So which means banks had more money supply. Okay, these are all one of the instruments or monetary policy instruments that your central bank or RBI uses to control the economy. Okay, the inflation for the fiscal year 2025, okay, was again, okay, increased. All this was slashed. Your GDP was predicted at 7.2, it was brought to 6.6. Your cash reserve ratio was kept at 4.5, it was brought to 4%. Whereas your inflation was predicted at 4.5%, but now this got increased to 4.8%. Okay. So you can see RBI repo rate or your policy rate, okay, otherwise also called as your policy rate, what we are discussing. Okay, it has been constantly kept, okay, unchanged. Do you see this line here? Okay, that is from your 2023. Okay, somewhere the slump started from your 2022. Okay, but post a 2023, April 6th, October 6th, 2023, April 5, 2024, September 8, 2024, it has been consistently the same. Yes, which means your, okay, which means your central bank or RBI is trying to take policy neutral or a neutrality of policy. Understanding? No. We'll explain in detail what repo rate is, all the implications we'll explain further. As of now, just the statistics we'll see. So consumer price based inflation was 6.21% in October, whereas it was 5.5% in your September. Okay, what is, okay, your consumer, now look at this first, consumer price index. Okay, whatever we're talking now. Okay, your consumer price index or consumer price based inflation. Okay, this is important topic, understand. Your consumer price index or otherwise called as retail inflation, consumer price inflation or retail inflation, whatever we tell. Okay, consider it like this: every household, okay, let's call it basket items, every household will have certain purchasing that is needed for the consumption of the household. So the consumption of the household activities or whatever is needed for the household, for example apparels, medical supplies, etc., all those things, if you put it in a basket, okay, you will come to know the price of that particular target. Okay, which means in simpler words, whatever the household consumes, okay, those price will help us determine inflation. In simpler terms, what is inflation? Price of the commodities in a particular year. Okay, when we say inflation, it is price is increasing, higher price, same commodity what today it is, but 2 years back it was not, 1 year back it was not. Why? There is a rise in the prices. Why? Inflation. One common example I'll give you. For example, in the year 2022-2023 post, okay, ending of 22-23, okay, somewhere March 2023 especially, okay, the inflation of oil, that is price range of oil and fats, was very high, okay, in your March 2023 oil fats. Why? Russia Ukraine war. So an event influenced the price high. Okay, so that is your inflation. So what is consumer price index or consumer price inflation? Is basically a group of products, consumed by the households, which will help us determine inflation. Inflation meaning what? Price hike. Clear up until here? So what are the things that contributes to your consumer price index? Commonly apparels, transportation, education, communication, other goods and services, recreation, medical care, food and beverages, housing. Okay. Now, what was the stance of Monetary Policy Committee at the end? Which means now they have come to a meeting, they've come up with the standard rates that we saw, repo rate, CRR, etc. Now, what are they predicting? First and foremost, a caution is needed. Okay, and there is limited room for rate cuts. Okay, at the same point of time, your National Statistics Office predicted that the GDP that you progressed or told was somewhere around 7.2%, but actual real gross domestic product, if you see, it was only 5.4%. See, in the beginning of the year, let's divide it in two parts. In the initial part of the year, it was completely slowed down. The economy wasn't slow down. Whereas when it started reaching to the second half of the year, the slowdown got bottomed out. When we say bottomed out, it just means that it hit the worst of it. It hit the worst of slowdown, but then the economy started regrouping, which means it started increasing. That was motivated by two things. One was your increase in rural consumption. Second thing was it was the festive season. Because of this, economy saw a little bit upward trend. Now, what is Monetary Policy Committee that we have been deciding? To create something called as Monetary Policy Committee. This was not there from very before. Your Reserve Bank of India Act 1934 had to be amended. It had to be amended by Finance Act of 2016. To bring forward this. To bring forward or set up a Monetary Policy Committee. That is under your section 45ZB of the amendment of RBI Act of 1934, which was amended by your Finance Act of 2016. It introduced that the government is now allowed to create a body called Monetary Policy Committee, which will comprise of 6 members. Among the 6 members, 3 will be from your RBI, 3 will be appointed by the government. Among these 3, one will be the governor of RBI, another will be the deputy governor of RBI. The another person could be your executive director of RBI. Usually. 6-member body, Monetary Policy Committee. How it came in? This was amended by a Finance Act of 2016, which allowed the government to introduce something called as Monetary Policy Committee, which was not there from before. Suppose 2016 is what we are seeing. In total, there is a 6-member body. 3 will be from your central bank or RBI. 3 will be appointed by the government. Among the 3 members, one will be usually one has to be. One is the governor of RBI, another is your deputy governor of RBI, another is your executive director of RBI. Now, this body is reconstituted every 4 years once. And no reappointment. Understanding? Now, what is the function? First and foremost, if you look, what is the main function of Monetary Policy Committee or RBI in first place? It is to control and handle your inflation. Main thing is to keep a target on inflation. See, we mentioned what is inflation? Price range. Yes. Now, if you see what is the target of that inflation that they have to maintain, that your RBI has to maintain means, I'll show it in the next. Look at this. your inflation has to be kept within a target. What is the target? Means, okay, there is both an upper target for your inflation as well as your lower target, which means above this it shouldn't go, below this it shouldn't fall. Okay, your base is 4%. Now when I tell base is 4%, 4% plus 2%, your 6% upper target, lower target, that is 4% minus 2%, that is 2%. Okay, your RBI has to make sure that your inflation target is kept within the bounds. Okay, that it shouldn't cross the upper limit nor the lower limit for 3 consecutive quarters. Okay, if it for example, let's say your RBI is going to set a target that okay, I'm going to keep the inflation within 4%. Okay, but for some reason the inflation was, let's say, 7%. That is too large, astronomical, but I'm just telling. But if that 7% has been there for 3 consecutive quarters, then it is held that RBI has failed to, okay, keep a target on inflation. In that case, what happens is, okay, your RBI will now submit a report to the government, okay, stating 3 things. First, why couldn't RBI, or why did it fail in containing the inflation? Okay. Second, what should the central government or government do in order to contain or curb this inflation? Okay. Third, it is the time tested. How long will it take? Okay, to bring back things to the normal. Okay, this is with regard to your inflation. Fine. Now, coming back to your monetary policy committee, we discussed about your inflation targets. Yes, the function is to make sure that, okay, the inflation is kept in check. Fine. Now, usually to make sure your inflation is kept in check, your RBI or your central bank, okay, it will deploy multiple monetary policy instruments, okay, such as your cash reserve ratio, repo rate, reverse repo rate, bank rate, statutory liquidity ratio, multiple things. Okay. Now, quorum, which means the attendance for a monetary policy committee to happen, this percent of people have to be there. Okay, I already told you it is just a 6-member body. Yes, in a 6-member body, at least 4 members should be there minimum if it has to happen. In that, one person has to be your RBI governor. In case he is not there, then the deputy governor can be in charge. Okay. Usually any decision made by a monetary policy committee is based on majority of the votes. Okay. In case there is a tie, okay, the tie is broken, or the second or the casting vote, okay, is given by your RBI governor. Okay, and whatever decisions that your MPC or monetary, okay, policy committee takes, that is binding on RBI. Okay, so in total your monetary policy committee is a statutory body, okay, with an institutional framework. Fine. Okay, and your monetary policy committee, etc., it will come under your Ministry of Finance. Fine. Now, in the beginning we discussed it, repo rate is kept unchanged, etc. Now we will discuss in detail as to what is repo rate. Okay, look at this. This is RBI or your central bank. This is your commercial banks. Understand this. To make sure, okay, let's say the economy has to be, okay, again, what is the role of RBI? Has to make sure, okay, inflation has to be kept in target, which means, okay, they will be the one who will decide whether money should be there, that is surplus money should be there with the society, right now, or should we curb the supply of money? That is, they are the ones who will decide on the supply of money. Should the supply of money be in surplus, that is in excess, that is more, or should it be scarce, which means should it be less? Okay, it tries to control the supply of money in the economy through your repo rate. Repo rate, or otherwise called as repurchasing rate. Okay, now your commercial banks, okay, will go, okay, understand it in simpler terms. RBI has money, okay, this commercial banks will want to go borrow money from RBI, okay. Let's say, okay, the RBI will tell, you can, usually this repo rate is 1 day. Understand very simple words. RBI is going to come and tell, okay, come and tell in the sense with repo rate. Commercial banks will now decide. Again, it is also institutions only, it has to make money out of getting some profit. Your commercial banks, now if they have money, excess money, apart from what they have, that is if they can borrow money and lend it out to people, okay, lend it out to people, they can earn interests. See, people who keep all the savings, deposits, etc. with the banks, that is a liability to the bank because it is bound to return it back. And it is not gaining anything. In fact, it has to put more interest and give, right? But whereas if you see when it gives loans, this will get interests, which means the banks, okay, are getting it as an asset. So now to lend out money, it needs money. So it decides it will go ask RBI the money. Okay, now RBI will tell, okay, I will loan out some amount to you. Okay, let's say I'm going to offer you 100 rupees. Okay, example ke liye, I'm going to offer you 100 rupees. You have to come back and repurchase. You'll have to give me some collateral. Understand it like that. And when you have to come and repurchase it back, you will have to give me, let's say, 1 rupee alongside it. Okay, 101 rupees when you're giving back. I also have to earn some interest. So this is interest that RBI is earning. So now understand it, our commercial bank goes, takes 100 rupees from here. This fellow is asking only 1 rupee. Let's say this guy will tell, I will issue a loan for you, but at 100 rupees I'll issue. When you return it back to me, you will have to put another 5 rupees and give it back. So here he's taking, additionally he has to give only 1 rupee. So 4 rupees he can pocket. Yes, this RBI usually this rate, whatever is there, now that is repo rate. Now here he has purposefully kept it low. Okay, repo rate is kept it low. Why? So that these people can borrow more, and this, in other words, there will be surplus in the society's hands to spend more. Okay, let's understand it. In case your RBI decides, no, I don't want too much money supply in the people's hands, so rather this fellow will tell, you will borrow 100 rupees from me, but you will have to give me 50 rupees when you give back. That is higher rate. Yeah, which means this fellow will now have to keep it more than 50 bucks. So even if he has to earn profit, let's say he has to keep it on 175, that is a whooping large amount of money. So this will not, okay, want the borrowers to take money from the bank because it's a too high rate. This the RBI will do so that it will put a scarcity, that is, it will reduce the supply of money. Okay, so this repo rate is one of the very important things where, okay, it's a monetary, okay, financial instrument tool, okay, that RBI uses to, okay, decide the supply of money in the society or economy. Understanding clear up until here? Any doubts on the repo rate part? Fine. What is, okay, all this can impact on the economy, the interest rates? Again, your repo rate is the one that depends. Okay, then another thing is with respect to investment and consumption. Again, based on the surplus or scarcity, only you will make sure how the investment and consumption is taking place. That is, whether you have to borrow money or whether you shouldn't borrow, because based on the bank rates, repo rates, reverse repos, all those are there. Your exchange rates, again, they are the your repo rate in turn will affect your exchange rates with respect to appreciation or depreciation, that is the value of the money. Okay, either the appreciation or depreciation, that is increased value or decreased value of money, is also decided by your repo rate. Yes, so this is a very major decision, okay, that your monetary policy committee puts forward. Okay, so a possible mains question is, discuss the reasons for keeping the repo rate unchanged and the role of monetary policy committee in inflation targeting. Okay, that is what we have discussed up until here. Okay, we've come to the end of the topic. Hope you have understood the content. If you do like our content, subscribe to our channel, hit the like button and share it along with your friends. Thank you.